A new solar-powered Bitcoin miner, Aspen Creek Digital Corp, raising $8 million in a Series A funding round led by crypto financial services firm Galaxy Digital and blockchain investment firm Polychain Capital. Joining us now to discuss is Aspen Creek Digital CEO Alexandra DaCosta. Hello, Alexandra. Thanks for joining us this afternoon. So I guess off the bat, where is this money going to go toward and being used for? And, after that, any hints of evaluation here?
We're really excited to be able to announce the successful Series A raise for our company. And so this money really goes to help to round out our second facility. We have already one facility operational in Colorado. It's a 6 megawatt center behind the meter with 10 megawatts of solar. And we are about to come online with our second site, which is 30 megawatts of solar behind the meter with 30 megawatts data center behind the meter with 87 megawatts of solar. As for hinting at the valuation, let's see what the markets determine for us. I feel like valuations, are important, but can also really be the death of companies depending on the timing of those valuations.
All right. Well, Bitcoin miners are certainly struggling with the macroeconomic uncertainty out there. They're narrowing profit margins and a spike in energy costs. And most recently, one of the largest Bitcoin mining data centers, Compute North, filed for bankruptcy, citing crypto winter, supply chain issues, and trouble dealing with its biggest lender. So what was it like raising money in a bear market?
It's complicated, and it's a lot of work. I spent my career in the capital markets on the debt side. And so, unfortunately, bear markets are nothing new. And so I think you have to really have faith that you are doing your best to control as many inputs as possible. And that's exactly what we did when we founded ACDC, was we took a look at the Bitcoin mining space and really wanted to make sure that we could account for as many variables and unpredictable variables as possible. And so, making sure that we were standing up our own power for our own use, and thereby cutting off at the pass the most important and most expensive input into Bitcoin mining, which is power, was really important for us. You speak of supply chain. We actually design, develop, build, own and operate our centers. And we did that intentionally because, again, we felt that it was really important to control as many steps of the process as possible. When you rely on one counterparty for whether it's too much funding, too much of your material inputs, it doesn't give you as much flexibility during these real supply chain crunches. And so I will tell you, this journey has been one of many pivots, but we've been very fortunate that by controlling a lot of the processes ourselves, we've been able to continue on our path.
So does having Bitcoin or solar-powered Bitcoin mining, does that make costs more efficient in terms of, the energy spikes that we're seeing right now?
It really does. I think for a few reasons. Primarily, this power first model that we have means that we are standing up brand new renewables for our own purpose, but we also size them larger than our needs to make sure that we're bringing additional renewable power to local communities. But when you're standing up that power for your own purpose, you are able to really control the cost, obviously in conjunction with your financing and your other counterparties. But most importantly, when you look at solar and you look at a lot of the energy usage that turns a lot of other, not just Bitcoin miners, but other industries upside down, these really high peak prices do coincide with often very extreme temperatures. And so those very moments that are typically most problematic for example, a Bitcoin miner, are going to be the hottest and sunniest days, which is when our solar development side is actually generating the most power.
All right, and how do you set yourself apart from other Bitcoin miners out there that are also similarly looking to raise capital? And in terms of location, you mentioned Colorado. Is there some strategic reason that you've chosen Colorado?
So our first site is in Colorado. Our second site is actually in Texas, just southwest of Houston. And our third site, which will be 150 megawatts behind the meter with 200 megawatts of solar, is in West Texas. You will see in our portfolio, which is actually 3.5 gigawatts of new renewable power over the next few years, other states in that mix. We selected those states intentionally because they were the core competencies of our power development partners, who are also part of our founders. And so they have very, very deep expertise in those specific regions. They have collectively stood up over 10 gigawatts of power over the last 10 years. And so we're really focusing in areas both where we have the local community expertise, the regulatory expertise, interconnection, but also states and regions where we can really do what we do successfully. And so the way that we were able to set ourselves apart from other Bitcoin miners was to lead with this very power first model. And so again, not only are you buying into this renewable power story, but most importantly, you're buying into a story of cost control and variability control. And that's exactly why we started this company. And I will tell you that when we first set out on this journey, the market was in a very different place. And so the metrics by which we were being judged as an early stage company may have been different, and maybe didn't always give us the opportunity to entirely differentiate ourselves, because Bitcoin was riding high, energy prices were low, and our kind of power first model was sometimes falling on deaf ears. We were very fortunate to have early partners such as Galaxy Digital and now Polychain as well, who really did listen to that story. But I think especially when you saw the market really start taking a turn and the energy crisis develop, and frankly, the capital markets start seizing, suddenly the power first model where you had, controlled energy costs and were able to be a flexible load, that really started resonating with investors. And it was more than just, kind of page 7 on our PowerPoint. It was the reality, and we were being tested in real time.